So in this one, I'm talking about a little thing called withholdings on federal taxes, actually. Um, I'm going to anonymize everybody I'm talking about here in this video, but I just want to lay out a couple things here because someone close to me is going through something right now that is predatory and it's not right, and I just want to make this video to lay things out here for what's going on, and maybe you're in a similar situation. I don't know. Our situation here starts with a W-2 employee. So for a W-2 employee, if the employer does not request for the employee to complete a W-4 form, what is the employer required to withhold by default? Is the employee treated as exempt from withholding by default with no W-4? That's the first question here in our situation. So we find ourselves with an employee who has no W-4 on file, and an employer who might be trying to claim that that means the employee is exempt from withholdings. If an employer does not receive a completed Form W-4 from an employee, the Internal Revenue Service mandates that the employer treat the employee's tax status in a specific way for withholding purposes. The employee is not treated as exempt from withholding by default. Instead, the employer is required to withhold federal income tax from the employee's wages as if they are single with no other adjustments. This means that the withholding will be done at a higher rate, consistent with the withholding rates for single filer with only one personal allowance. This approach is designed to ensure that some amount of tax is being withheld, thereby reducing the likelihood that the employee will have a large tax liability when filing their annual tax return. The employee can, of course, submit a Form W-4 at any time to update their withholding preferences. And the W-4 is the mechanism by which we update our withholding preferences. There's not really another way beyond a W-4 form where you can do that. That's why we have the W-4 form. So the next question is, while the employee had never submitted a W-4, the employer is claiming that this means the employee's wages are exempt from withholding, and the employer was not required to withhold any of the employee's federal income taxes. Without a signed W-4 for the employee, stating a preference for exempt withholding, is this assertion by the employer correct? And, of course, the answer is no. The employer's assertion is not correct. If an employee does not submit a Form W-4, the employer cannot treat the employee's wages as exempt from federal income tax withholding. The IRS guidelines are clear on this matter. The absence of a Form W-4 means the employer must withhold federal income taxes as if the employee is single with no other adjustments. This means withholding taxes at the higher rate applicable to a single filer with only the standard deduction. And employees' wages can only be treated as exempt from withholding if the employee affirmatively claims exemption on a Form W-4. To do so, the employee must clarify that they had no tax liability in the previous year and expect to have no tax liability in the current year. If these conditions are not met and no W-4 is provided, the default withholding status must be single with no other adjustments, not exempt. Therefore, In this situation, the employer is not following IRS guidelines by not withholding federal income taxes from the employee's wages. All right, so the next question is, in order to support their assertions, would it be necessary for the employer to produce a W-4 signed by the employee stating that they were exempt from withholding? If the employee has never signed a W-4 form claiming to be exempt from withholding, is it right for the employer to claim that the employee is liable for saving the money necessary to pay their own taxes without the help of the employer? And the answer is yes, in order to support their assertions. The employee is exempt from withholding. An employer would need to produce a W-4 form that is specifically signed by the employee claiming exemption from the withholding. The IRS rules stipulate that an employee must affirmatively claim exemption from withholding by filing a W-4 form stating that they are exempt. This involves the employee certifying that they had no tax liability in the previous year and anticipate no tax liability in the current year. If an employee has never signed a W-4 form claiming to be exempt from withholding, it is not correct for the employer to treat the employee's wages as exempt from withholding in the absence of a W-4. The employer should withhold taxes as if the employee is single with no other adjustments, which is the default withholding status. Regarding the employer's claim that the employee is liable for saving money to pay their own taxes without help from the employer, this is a misinterpretation of the employer's obligations under the tax law. The employer is legally required to withhold taxes according to the status indicated on the W-4 form, or if no form is provided, at the default status. It's the employer's responsibility to withhold the appropriate amount of taxes and remit them to the IRS. The employee's responsibility is to ensure that their W-4 form reflects their current withholding status. If the employer fails to withhold taxes correctly, it's the employer who may face consequences from the IRS, not just the employee. And the next question is, if the employer claims that it was the responsibility of the employee to request and look at their pay stubs in the absence of a signed W-4 in order to be notified that the employer wasn't withholding wages, and therefore the employee is liable for the associated tax burden as a result of not doing so, is this assertion by the employer correct? If this is not correct and these actions were deliberate, why might the employer be trying to act in this way? What motivations would they have to convince their employees of this false information? And a follow-up question. In this situation, if the employer understands withholding requirements as a business owner and deliberately failed to withhold the employee's federal income taxes in the absence of a signed W-4, claiming instead to have given the employee a raise, should the employer, in fairness, be held liable to remit these taxes to the IRS? And the answer is the employer's assertion that it was solely the employee's responsibility to request and look at their pay stubs to notice the lack of withholding, and therefore the employee is solely liable for their tax burden, is not entirely correct. While employees should regularly review their pay stubs to ensure accuracy in deductions, including federal income tax withholding. The primary responsibility for initiating and correctly handling tax withholding lies with the employer. The employer responsibilities are that they have some withholding requirements. Employers are required by the IRS to withhold federal income taxes based on the information provided by the employee on Form W-4, or if no W-4 form is submitted, the employer must withhold at the highest rate, as if the employee is single and claims no adjustments. And the employer also has responsibility of notification. Employers should inform employees of their pay and any withholdings clearly and regularly, but the obligation to withhold does not depend on whether the employee reviews their pay stub. The employee has some responsibilities as well, reviewing their pay stubs. So employees should review their pay stubs to ensure that withholdings are correct, but failure to notice an error does not transfer the employee's responsibilities to the employee, right? The responsibility of the employer is to withhold correctly, and failure to notice an error does not transfer that responsibility onto the employee. So there are some motivations for why an employer might act in this way. Firstly, it's less administrative burden. So the employer might want to avoid the administrative tasks associated with withholding and remitting taxes. Secondly, there's some cash flow benefits, I might like to think. So by not withholding taxes, the employer could temporarily benefit from improved cash flow, albeit improperly. And finally, there might be some misunderstanding of the tax laws. So the employer might genuinely misunderstand their obligations, although this is less excusable for businesses with access to tax advice. So if you have an accountant, I highly doubt this is the case. And in our particular story here, somebody does have an accountant, and maybe it's even the accountant who might be helping to perpetuate this false information. So let's talk about potential liability. If an employer deliberately fails to withhold taxes under the guise of giving an employee a raise, this is a misinterpretation of tax laws and payroll practices. Such actions could be seen as tax evasion or non-compliance with federal tax withholding requirements. The employer could be held liable for the taxes not withheld, including penalties and interest. The IRS places the responsibility on employers to correctly withhold and remit taxes. So, in conclusion, employers cannot shift legal responsibility for withholding taxes to employees based on the employee's failure to notice incorrect or missing withholdings on pay stubs. Deliberate failure to withhold can lead to significant legal and financial penalties for the employer. It's in the best interest of both parties to ensure compliance with tax withholding requirements. If an employee finds themselves in such a situation, they may need to seek legal advice or contact the IRS for guidance on how to proceed. So that's the end of this little analysis here that I thought I would share. Like I said, somebody close to me is going through a situation like this, and I've anonymized the parties involved with this particular situation. But I hope the people who watch this can, if you're going through something similar, don't take this laying down. This is wrong. This is designed to manipulate you into paying a lot more money than you actually need to pay. This is tax evasion. This is fraud. And for the people involved with the particular situation that I'm talking about here, you know who you are. To the employee, this is wrong, as I've told you already. And I hope that you don't give people a free pass just because they're your friend or close with you or something like that. Everybody needs to do what's right. And to the employer, from one business owner to another, I know 100% that you must have known what you've done in this context. You better make it right. I'll just say that. And I'll leave it there. So I hope this video has been informative and useful. If you are going through something like this, especially as an employee, don't take it laying down. And if you're doing this as an employer, telling people you're giving them a raise and then claiming you don't have a W-4 on file and then saying they're exempt at the end of the year when they ask you, that racket's not going to last too long, and it's never going to end well for you in the long term. So thank you for taking the time to listen to this here. And like I said, I hope it's been useful. It's not usually something I'll make a video about, but in this case, like I said, this was someone near and dear to me, and I felt compelled.